Hello to all traders and welcome back to the market review brought to you by Orbex. So yesterday we reported that gold was heading for another record high, and now it has hit that record high, roughly just about $40 from the previous high that we saw, and we're seeing that possibly from the morning session there will be a continuation of this bull run. So it's all in the event that the Fed is expected now, not only 70%, 80%, it's actually 100% proof that they will start cutting rates in September. There's a lot of more signals, a lot more predictions going around in the market, and also we've had a boost on US indices as well. The Dow Jones hitting record highs, moving over 700 points in one session yesterday, and as well as the S&P and Nasdaq really pushing higher as well. So it's not only the big mega cap stocks like Nvidia, Microsoft, Apple that are doing well, it's also the smaller cap stocks that will benefit from rate cuts as well in the near term. So this is really driving stocks, really bullish rhetoric in the market at the moment, and we'll see just how far this can go. So let's just take a look on the Dow on the daily chart. As I said, 700 point jump in less than a day, which is quite astonishing. We're just having now this RSI going into overbought territory, so we could see a slight pullback in the near term, but it probably won't be too bad in the ways of a big dent in the market before we see another high. Same with gold, same with a lot of the indices as well. We just take a look on the S&P, which has hit, as I said, another record high itself, and we just see these indices just hitting more and more of a high. Not really too much of a big correction as well on the way higher. I mean, if you look at this 150% jump from the beginning of the year, it's just been very astonishing, especially with the likes of Nvidia, Apple, Microsoft doing very well. But like I said, it's the small cap stocks as well that will benefit from rate cuts, which has really driven the optimism in the market, which is really phenomenal actually. So just take a look on the 4-hour chart for, let's go back to the Dow quickly. 4-hour chart for the Dow. Just want to show you intraday market movement, and we're just seeing now possibly as I said before, we could see a slight pullback because we are in a majorly overbought territory on most of the stochastics, the RSI and MACDs, quite a few of them that we're looking at the moment. I've just got the RSI on the screen at the moment, don't want to confuse or have too much on the screen at the moment, but as you can see, it's really probably going to start having a slight pullback before a potential move towards, well, eclipsing 40,000, obviously 41,000, 42,000. The sky's the limit for the Dow at the moment. And let's just go back to the S&P for the 4-hour. And like I said here, not really seeing too much of a pullback. If we just look at this pullback here and this pullback, not too much to dent optimism to have another push higher. Obviously from the previous reading, I'll just remove some of these drawings, get a little bit out of control now. So we're just seeing now that price action can start moving a bit higher. But yeah, as I said before, from this pullback here and this one, we're not really having too much of a dent in optimism, and we're just, because we're hitting higher highs as well, this particular range hit above the previous swing high, and now we're going higher and higher. So there's not really too much in sight for a pullback, a big correction, but it's all about the Fed comments. We are expecting the Fed to speak out and do confirm that they will start cutting rates even before the September meeting. So let's see, we'll keep an eye on that and see how it affects the markets as well. So thank you for joining me once again. If you are trading indices or gold, please let me know. We'll post this video on our YouTube and Telegram channel, and we'll get back to you as soon as possible. So feel free to like, subscribe, and leave a comment, and we'll speak again next time. Bye for now.